This is Andrew Stotz of Stotz Investment Research talking about world-class benchmarking. Today I'm going to talk about LT Group Incorporated in the Philippines. A little background on the company. First of all, LT Group Incorporated is one of the largest conglomerates in the Philippines and was founded in 1937. Yes, that was before I was born. LTG invests in the banking industry with PNB, in tobacco with its interest in PMFTC, beverages through Asia Brewery Inc., property development through Eaton Properties, and distilled spirits through Tanduay Distillers. If we look at the company's information, we can see that the ticker code is LTG. The market capitalization is about $4 billion US, and it has $2 million in average daily turnover. The beta, and this is rare, is a negative 0.2, meaning there's pretty much no and even slightly negative correlation between this share price and the market. The company is listed in the industrials sector, and its industry is capital goods. What we can see when we look at this company is that LTG's business can be divided into 5 main divisions. Its presence in the banking industry is maintained through Philippine National Bank, PNB, which is the 4th largest bank in the country. It provides financial services to corporates, middle market and retail customers, and government and non-government units. Now, the company's tobacco business is run through PMFTC, a joint venture between Philip Morris Philippines Manufacturing and Fortune Tobacco Corporation, in which LTG has a 49.6% stake. This company, PMFTC, supplies and manufactures cigarettes, tobacco, packaging, labels, and filters. The beverage division is operated by Asia Brewery and is one of the 2 breweries operating in the Philippines. It provides beer, liquor, and non-alcoholic beverages such as soft drinks and bottled drinking water. It bottles and distributes spirits through Tanduay Distillers, the operations of which include selling and importing spirits. Property development is carried out via Eaton Properties, which acquires, develops, and sells commercial, urban, and industrial properties. So let's look at the revenue breakdown, and we can see that banking through PNB accounts for 53% of overall revenue. Beverage accounts for 17% through Asia Brewery Incorporated. Tobacco accounts for 16%, and distilled spirits about 6%, and finally property about 5%. So more than half of the revenue is coming from the banking side. Let's look at world-class benchmarking for the company to understand its financial performance. The first thing is that Mr. Lucio Tan has been the chairman since 1995, and that's a long time. Of course, the family's company, and therefore the son, Michael Tan, is running the company since 2000, so he's got 16 years of track record. And let's look at the company's ranking. We can see profitable growth maintain its number 8 ranking. That means the company ranked better than only 286 of 1,430 large industrial companies globally. So a pretty poor performance as far as profitable growth is concerned over the last 5 years. So we can see that where does this come from? Well, the main thing is profitability. That's the weakness. Profitability, which is ROA, is ranked at an 8. Whereas growth is ranked at a 2. In fact, growth was 3 in 2015 and 2 so far in the prior 12 months. And what we can see when we break this down is that for profitability, it's really all about profit margin. The profit margin of this company is fantastic. It's world-class. It's ranked number 1. Whereas asset utilization is at the exact other end of the spectrum at 10, and it has been ranked 10 for the last 5 years. So figuring out how to get more revenue out of the existing assets would be the key to raising the profitable growth rank of this company. Now, if we look at EPS growth, it's ranked number 2. Where is this coming from? Well, margin change. The company is actually improving its margin even though it's ranked at number 1. And number 2, it's also coming from sales growth, which is ranked number 4, coming up from number 5. So if you look at this company, in fact, It's great on profit margin, and it's been improving its profit margin all the way to the top. And sales growth is above average. So really, the key to getting more out of this company and getting its profitable growth ranking is all about asset utilization, getting rid of underperforming assets, reducing the size of the balance sheet, and boom, profitable growth rank would go up from number 8 to 7 or 6 or 5 or 3 or 2, or imagine the market capitalization of this company's profitable growth rank could go from 8 to 1. Unbelievable. All right. Do you want to see the profitable growth rank for a company in your portfolio? Well, leave a comment below with company name and country of listing, and I'll post it if I have it.